Hey guys, today I'm going to be talking about some good tips that you could apply to the charts and you could apply to your analysis and you could apply to everyday thinking with your psychology, right? Before we get into this, I want to let you know who I am, a little introduction about myself. My name's Isaiah. I'm 27 years old and I'm still currently a firefighter trying to make this day trading, trying to make this a reality. I'm not going to stop. So if you haven't already, subscribe and hit the bell to watch my journey and watch me transition into a full-time employee to a full-time day trader. I've been trading for about 2 years, and I've been trading for the last year about ICT concepts. And I really like ICT concepts. For the first year of trading, I was just trying to figure it out, trying to see what works, what doesn't. At the first year, I really had no clue what was going on. I was just trying to find something that worked. And I was catching trades here and there, but just luck. And then the second year, which is this year, I found ICT. And for the last year, I've been studying it, refining it, and trying to understand it. And now I just see the market and I feel like I understand the market way more than I ever have. And I really want to share these tips with you. So I have 5 tips. 3 are psychology based and 2 you could apply it to the charts and you could apply it to your analysis. So if you're really trying to up your trading, stay tuned and you'll see those 2 tips. They'll help a lot. The first tip, you will lose and you will lose progress and you will blow accounts. And that's totally normal, especially when you're learning. It's, at any point of this game, it's normal. It's very heard of, right? So this day trading, stock market, futures market, whatever you want to call it, whatever part you're doing, whatever asset class you're doing, losing is going to be normal. You don't have a lot of business ventures where losing is normal, right? Especially losing 2-3 times a week, right? And still coming out profitable. That's kind of unheard of in a lot of these businesses and a lot of these ventures. But in trading, losing is totally normal. If you get on the charts and you won Monday, Tuesday, but took a loss Wednesday and Thursday, and you're at break even, a lot of people tend to feel like they're doing something wrong. But if you have a nice system and you back tested your system and you trust what you're doing, Friday could be the day where you cash a trade and you're up 2, 3, 4%, right? That's normal. You had a profitable week. So when you take these losses and you have these setbacks, you can't look at them at a day-to-day thing. You have to look at it at weeks and months and even years. And that's really helped me slow down. That's really helped me with my impulsiveness and my impatience, understanding that losses are normal. And just because I lost doesn't mean I did something wrong. It's just probabilities. So at the end of this game, everything is probabilities. Step number 2, patience is key in this market. I know how I just mentioned patience and I know how I just mentioned studying and analysis and everything like that, but patience is key in this market. And the way to develop patience is to put in the work, put in the study time, put in the chart time, put in the back testing, because once you understand what you're looking at, once you understand your system, and once you know your system like the back of your hand, a lot of good things happen, right? You develop some kind of intuition within the markets. You trust your system more. And you understand how price moves even more. So when you see price move in a certain direction, you see these large movements, you're not feeling impulsive, you're not feeling impatient, you're not feeling like you're gonna miss something or you're doing something wrong. If you did the work, you'd understand what you're seeing on the screen and what you're seeing on the chart, therefore building more patience because you understand what's coming, right? When we're driving and we're sitting at a red light, we know the light's gonna turn green, right? We know it's gonna do that. We just have to have patience and just wait. Well, it's not like we're sitting at the red light for the first time ever and we're like, what's going on? Why is this light red? Why is it not moving? I'm just gonna go. And then you go thinking that the light's never gonna turn green and then you get into a car accident, right? So putting in that work really builds that patience, really builds that knowledge that you need to continue to be consistent on the charts. Step number 3, if you're a new trader or even a struggling trader, or even like me, an unprofitable trader, my biggest tip is to find a mentor and find a strategy that mentor promotes or study or whatever you call it. Just find a strategy first and then find a mentor that you can understand. Don't find a super complicated strategy that you don't really understand and now you're forcing yourself to understand. That'll hurt you more. So find something that you could understand right off the bat, something that's simple, and find someone that you can trust and talk about that system. Because the worst thing you can do is trying a strategy and skipping or going to another strategy within another month or another 2 months. finding a mentor and not really, he doesn't really see it the way I see it. You don't agree. And then you go to a different a mentor that has a whole different perspective of the charts. And now you're starting from scratch, basically. And now you're even doubting everything you knew in the back that you did previously. So when you go into the charts now, you're just super doubtful, hesitant, and you're like, oh man. So stick to one mentor, stick to one strategy that you like, and hone in on it, refine it, make it work towards you. Take the trades with that strategy, back test that strategy, journal your wins, journal your losses with that strategy, and just refine it, right? Doing that for 6 months will get you so much farther than jumping from strategy to strategy every month or two. So now we're going to be going on the charts. So that leads me to tip number 4. All right, tip number 4. So tip number 4. This is, now we're on the charts now. So if you're new or if you just don't know, my piece of advice to you is to study fair value gaps and liquidity. All right. Why I say fair value gaps, and first of all, what are fair value gaps, right? So fair value gaps are going to be a 3 candle pattern, right? So you have this candle, and this candle. Right off the bat, can you tell me what you notice about this candle? That there are no candles or any wicks or anything touching here, right? Unlike over here, right? Where's the fair value gap over here? You got a little one over here. You got a little one over here, right? Nothing crazy. There's no gaps over here, right? There's a huge wick. There's no gap here. So fair value gaps are these gaps that no wicks or candles touch after a nice price movement, right? And I say study these because not only do they show you a good narrative, they also can show you where to watch out for entries. Like, look at this, right? So price comes into this one almost at the halfway point and reacts. Now, this is the 1 hour time frame. If you go down to a smaller time frame and you have back tested some type of strategy or some type of entry model, you could have potentially caught a nice, 1 to 2 or 1 to 3. This is a pretty big movement, right? Now you could go down to this one, right? Almost at the halfway point. Look what happens here, right? Price moves and reacts a little bit. Now, it didn't give a huge price movement like this one did up here, but if you're in the smaller time frames, this movement right here is all you need to catch a good move, right? Again, let's go to this one. Another fair value gap. Look at that. Nice to the halfway point, continues to push up, right? Now, when I said study liquidity, liquidity is just a simple term for where's the money at, right? Where is the stop losses at? Where are the buy stops at? Sell stops? Where are those things at? Because money moves the market. So now if you put a fair value gap right here, some people's entries are right here, or people's stop losses are right here, right? At that low. Look what happens. Price runs that low, takes the liquidity, meaning takes their stop losses, goes into the fair value gap, and continues that push up. All right. This happens all the time. All right. Now look at this example. People stop losses. Oh, hit the fair value gap. Oh, we're going up, right? So people will enter, put their stop losses at that low, and look what happens. Price runs that low, takes their liquidity, takes their stop loss, and then moves up, right? So my tip is study fair value gaps and study liquidity. Now, I'm not telling you to go out there and just trade every fair value gap, trade every stop hunt, and roll with that, because you will end up just losing all the time. Study it, back test it. Now look how you could apply it to your trading, right? I like to apply these fair value gaps and these runs on liquidity on the higher time frames, because the higher time frames really can paint a clear picture on where you want to go. You want to go long, you want to go short. Is the market bearish? Is the market bullish? Right? Using these fair value gaps and these liquidity points on a higher time frame really paints a clean story for you. So when it's time to enter the market on the lower time frames, you're not confused on where you want to go, even though the lower time frames are going lower and you're like, oh man, we're going bearish. But in reality, the higher time frames, the hour, the 4 hour, the daily, they're all going up. So that builds that patience, that builds the knowledge. So when you're in those opportunities and you see these things, you know exactly where you want to go and how you want to go. Step number 5, this leads me to ranges, right? ranges have helped me a lot, especially when it comes to building patience, especially when it comes to building resilience and everything like that, right? Ranges, you would want to put it on strong price movements like this movement right here. This is a nice movement. This is a good, strong, bullish movement. Now, if the market's bearish on the higher time frames, this is an hour time frame. So if you want to trade the hour time frame as a higher time frame narrative, you can do that. So now you're going to be like, okay, cool. Now it's bullish. Where can I get in, right? All right. People will try to get in here. They'll try to be scared. The most important thing is to have patience. And you could add a range, which is adding a Fibonacci to the beginning of the price swing all the way to the end, right where it loses gas, right? Now look at this. There's two areas. The top, premium, the bottom is discount. If you're long and you're bullish, you always want to wait for price to come into discount, right? So if you have multiple areas of interest that you think that you want to enter on, or you just don't know, add the range and tell yourself, I'm only going to look for entries when price comes to discount, because look what happens when it comes to discount, right? You have this fair value gap right here. You have this liquidity right here, which is that low. Price runs that low, goes into the discount, into the fair value gap, and then boom, all the way up. But right here, as you see, so you add the range, price goes into discount, runs the liquidity, and then goes continues to push up. So if you're going long, all you got to do is just go on to the smaller time frames and find your entry opportunity. Now I have more videos on how to build a narrative, how to enter trades, how to calculate risk and everything like that. Just again, go ahead, subscribe and ring the bell, because these videos aren't out yet. I'm currently making them. But if you're trying to find entries like this, just stick around and I'll show you. So that's all the tips I have for today. If you want to see some more, if you want to see some entry opportunities, entry strategies that I personally use, go ahead and subscribe, hit the bell, or just come visit back on my channel, because I'm going to be giving you guys a whole bunch of tips and tricks and how I do things. I'm starting to catch some traction. I'm really starting to feel like 2025 is going to be where I'm profitable and making a lot of money this year off of these entry models and the way I see the market. So if you liked what you saw, hit subscribe, hit the bell, and come back for more. Thank you so much for watching. I'll see you next time.